For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has recently experienced a significant downturn in its stock price, triggered by concerns over reductions in United States defense spending. The company's shares have suffered their most substantial four-day decline since 2022, following the announcement by Defense Secretary Pete Hegseth that the United States government intends to cut its projected military budget by 8% over the next 5 years. This move has raised concerns among investors, as Palantir derives a substantial portion of its revenue from government contracts, particularly those tied to defense initiatives. The announcement has ignited widespread speculation about how these budget cuts could impact Palantir's future growth. Some analysts argue that as the Pentagon seeks to streamline its operations and enhance efficiency, Palantir could ultimately emerge as a beneficiary due to its expertise in artificial intelligence-driven data analytics. However, this optimism has not been enough to prevent a sharp sell-off. Investors reacted quickly to the news, pushing Palantir's stock price downward, as fears mounted that reductions in military spending could jeopardize one of the company's most critical revenue streams. Tim Pagliara, Chief Investment Officer at Cap Wealth Advisors, weighed in on the situation, noting that while Palantir's valuation is now somewhat more reasonable than before, the company still faces considerable risks. He emphasized that uncertainty surrounding the final shape of the military budget makes it difficult to forecast the company's future growth with confidence. Until more details emerge regarding the precise nature of the spending cuts, investors are likely to remain cautious. On Monday, Palantir's stock declined by 4.6%, contributing to an overall drop of more than 20% over the past 4 days. This sharp downturn underscores the volatility that has long been associated with the company's stock, particularly as it remains one of the most expensive names in the technology sector. Despite the current sell-off, Palantir has been one of the standout performers in the artificial intelligence-driven technology boom. Over the past year, the company's stock has soared by more than 300%, adding nearly $190 billion in market value. However, what sets Palantir apart from many other technology firms is its heavy reliance on revenue from the United States government. While artificial intelligence and data analytics have become increasingly lucrative sectors, Palantir's financial success is more closely tied to government contracts than its competitors. This unique position leaves the company particularly vulnerable to shifts in federal spending policies. The situation has been further complicated by President Donald Trump's pledge to reduce federal expenditures. Previously, Palantir benefited from rising government spending, but with this new emphasis on fiscal restraint, concerns have emerged about whether the company can sustain its impressive growth trajectory. Defense Secretary Hegseth has set a deadline of February 24th for input on the proposed budget reductions, meaning investors will soon gain more clarity on how these changes will impact Palantir and the broader defense sector. Data compiled by Bloomberg indicates that more than 40% of Palantir's total revenue in 2024 came from contracts with the United States government. This segment of the business has demonstrated strong growth, expanding by over 40% in each of the past 2 quarters. However, Bloomberg Intelligence has pointed out that this level of reliance on government funding is highly unusual for a technology firm. While most of Palantir's software industry peers derive only a mid to high single-digit percentage of their revenue from government contracts, Palantir's exposure is far greater, making it particularly sensitive to shifts in public sector spending. A closer look at the company's government-related revenue reveals that military contracts are especially crucial. Analyst Louis Di Palma from William Blair estimated that approximately 22% of Palantir's government revenue originates from its work with the United States Army. Given this heavy reliance on defense-related funding, any substantial cuts to military expenditures could pose a significant challenge to the company's financial performance. It is also worth noting that Palantir's stock has historically exhibited considerable volatility. Just last month, the company experienced an even steeper decline, only to stage a strong rebound that propelled its share price to a record high on Tuesday. However, the latest news regarding proposed Pentagon spending reductions has once again triggered a sharp decline, highlighting the unpredictable nature of the stock. Jack Ablin, Chief Investment Officer at Crescent Wealth Advisors, which holds shares in Palantir, commented on the recent downturn, stating that major headlines like these often serve as catalysts for investors looking to take profits. He acknowledged that while concerns over budget cuts are valid, he expects the administration to carefully evaluate its spending priorities. According to Ablin, technology vendors like Palantir are likely to continue securing government contracts, and there is even the potential for these partnerships to expand as the military prioritizes efficiency and digital transformation. Despite the recent dip, Palantir remains one of the strongest performers within the Nasdaq 100 index this year, having gained approximately 28% year to date. The company has consistently defied skeptics, most recently surging in value after issuing a robust revenue forecast. Management has attributed this strength to what it describes as rapid and untamed organic growth in its artificial intelligence software segment. Some analysts argue that the continued expansion of artificial intelligence applications could serve as a buffer against risks associated with government budget reductions. Wedbush, a financial firm that has an outperform rating on Palantir's stock, believes that the company's unique software solutions will enable it to capture a greater share of the Pentagon's information technology budget. The firm also suggested that while budget cuts may seem like a short-term negative, they could ultimately act as a catalyst for further growth by driving the Department of Defense toward more advanced and cost-efficient solutions like Palantir's offerings. Wall Street's reaction to last week's sell-off has been relatively measured as consensus forecasts for both earnings and revenue have continued to rise. However, there is no denying that Palantir's stock remains richly valued, which leaves it vulnerable to fluctuations. At present, Palantir's shares trade at a staggering 170 times estimated earnings, making it by far the most expensive stock in the S&P 500 information technology sector. This valuation is nearly double that of the second most expensive stock in the sector, CrowdStrike Holdings. In comparison, the overall sector trades at a valuation below 30 times earnings, underscoring just how aggressively Palantir is priced relative to its peers. The elevated valuation has been a recurring point of concern among investors. More than half of the analysts tracked by Bloomberg have issued hold ratings on the stock, while 6 analysts recommend buying and 5 suggest selling. Additionally, Palantir's stock is currently trading approximately 4% above the average 12-month price target, making it one of the technology sector's weakest projected performers. Nevertheless, long-term believers in Palantir remain optimistic. Tim Pagliara of Cap Wealth Advisors, who holds shares in the company, expressed confidence in Palantir's ability to weather any potential spending cuts. He argued that as the military places a greater emphasis on efficiency and adaptability, investments in artificial intelligence and data-driven technologies will only increase. According to Pagliara, this shift could work in Palantir's favor, allowing it to continue securing government contracts despite broader budget reductions. He emphasized that unlike traditional defense contractors that manufacture physical military equipment, Palantir operates in a space that aligns with the Pentagon's push for modernization. To summarize, Palantir's stock has experienced a sharp decline following news of planned cuts to United States military spending. While concerns over reduced government funding are valid, some analysts believe Palantir's artificial intelligence-driven technology could help it withstand these challenges. The stock remains highly valued and volatile, but long-term investors continue to see potential in its unique position within the defense and artificial intelligence sectors. As the February 24th deadline approaches, investors will gain more insight into how the budget cuts will unfold and whether Palantir can continue its impressive growth streak. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.